Let's bring in Nonso Ifejo, a fixed income dealer with Access Bank, for details on that. Thank you for joining us, Nonso.
Yeah, thank you. Good afternoon. Thank you for having me.
And welcome back from that.
Yes, as you right.
Oh, go ahead.
Yeah, thank you so much. Yeah, as you rightly mentioned, the auction is currently underway. I would just give context to what we had seen in the market from on Monday. The market has actually
dauert jetzt eine Zeit lang.
We have seen traders maintain a cautious approach. This was in anticipation of the auction. We had seen scarcity of papers on the long tenured OMO bills, and that is not surprising because we've not seen back-to-back OMO auction in the longest time now. For the auction today, I would just take a step backwards to what had transpired at the last auction. For today, there is 400 billion on offer by the DMO. At the last auction, what we had seen was an offer of 800 billion. Subscription was over 1 trillion, and at the end of the day, the DMO sold 424 billion, and we saw stop rates for the shorts end close at 18.5, the belly of the curve 19.5, and the long tenured bills at 19.5%. For today, as I earlier mentioned, there's 400 billion, 50 billion on the short end, 100 billion on the belly of the curve, and 250 billion on the long end. Some of the drivers for the auction for today would be one, the market liquidity, the robust liquidity that we have seen. As at commencement of business today, liquidity stood at 950 billion. As a result of the FAC inflows that we have seen come into this system. The second driver is the deficit, which is at 13 trillion. We still see the government coming to fund that deficit. And if you take a cue from what one of the matrices of the budget, which is the oil prices, is doing now, it goes on to say that the government may be under some sort of pressure to at least cushion the effect. Brent crude as at yesterday was at 68 naira. The budget was benchmarked at 75 naira. So because of that, more brains may be needed to cushion the effect of that shortfall.
Okay.
We've also seen the FAC allocation from January 1.7 trillion fall to 1.6 trillion in February, and then 1.5 trillion in this March.
Okay.
So the combination of this factor and the fact that the auction at the previous auction was actually oversubscribed, but DMO understood, we would see market players
also
with their to participate at this auction.
Okay, yeah, no, so I know you have quite a lot of information to give us about that primary market auction, but I think because of time, we need to rush up things a little bit. So now, the youth environment is actually where investors look into, and we have a latest report that said that foreign investments in Nigeria, it hit about a 2-year high due to juicy duty returns. So now, how is the youth environment so far? How is it for investors within the fixed income market? Is it very, very juicy as we speak?
Yes, so it's been attractive. Looking at where rates are, the last auction, as earlier mentioned, was at 19.63%. That's the discount rate. If you do the yield, that gives above 20% levels. We know that inflation saw an increase of about 24%. However, with the return, with the yield on the fixed income paper, it still provides a positive carry. And we know that when you look at other climes, there has also been clamor for a rate cut. But in Nigeria, MPR has been maintained at 27.5% for some time now. And looking at where inflation is, there is really no serious indication that we might start seeing a rate cut at any point from now. So when you look at the yield environment, it still provides a positive carry for traders, even though some of the volatility experienced in the FX markets still poses a concern. However, we've seen the Apex Bank come in its might to stabilize that, and that should, to some extent, give the foreign portfolio investors that might want to come in some confidence that if they come at a certain rate, that they will be able to exit their position at profitable levels. Thank you.